All right. Well, thank you everyone very much for joining us here today. For those who don't know me, my name is Lustrino, founder and CEO of Kingscrowd. Um, we started this series recently to give you an opportunity to connect more directly with the founders we're backing at Kingscrowd Capital and have another access point and another opportunity to really get all of your questions answered about investing in the companies that we're investing in. We do a deep dive analysis on each and every business that we're investing in out of Kingscrowd Capital. We've made nearly 60 investments to date now in some incredible companies. And this is a way for us to be able to provide you even more access to the founders, even more information, and really help you understand why we invested and what we saw in the opportunity to help guide you if you're an investor in the fund and you want to double down, or you're just interested in learning more, or if you're on the line and trying to decide whether or not this investment makes sense for you. So with that, today we will be speaking about Sphere, and we will be joined momentarily by the founder of Sphere, Alex, who is an incredible founder. I have talked with easily over 1,000 founders over the past 8 or 9 years. And Alex, I would put in the top 1 or 2 percentage points of just really, really impressive, thoughtful founder with founder market fit, all the things that you look for. Has had incredible success in her past ventures and is now creating this company in the 401k space. And for me, what's so exciting about the opportunity is that this team has already worked through many of the hardest things you have to do in order to have a chance at building a successful 401k investment product. So we're going to get into all of that, but I think this is a really, really exciting company with a lot of opportunity. And so we're going to dive in on that and give you a better sense of why we see that. If you look at the financial metrics, you're not going to see anything that pops off the page and really excites you. But when you dive into it, understand all the things that Alex and her team have done to set themselves up to really scale, the opportunity starts making a lot of sense and it gets really exciting. So with that, let's bring Alex on to join us and we'll dive into all things Sphere. We have links there to the analyst report on why we decided to invest in the full kind of deep dive analysis that we did. So if you click on the resources section at the bottom of the Zoom, you'll be able to access that link and see the report on why we decided to invest. And also, please drop your questions into the Q&A section throughout as they come to your mind. And then we will work to get to as many of those as possible throughout the hour. So Alex, thank you so much for being with us today.
Thanks so much for having me.
It's my pleasure. So for those who don't know you or just kind of getting to know you a little bit, give us a little bit of background on yourself, your past endeavors, and how you came to found Sphere.
I have been passionate about climate change my whole life, going back to middle school, where my 7th grade science teacher taught me about climate change, and I couldn't stop thinking about it since then. So I set out to have a career trying to turn around climate change. I thought if I could be a serial entrepreneur helping get technologies out of labs that could have an impact on climate, that could be worthwhile. So I ended up going to MIT for an MBA as an excuse to meet people across campus inventing things, which was amazing. There are over 300 labs at MIT that do energy-related research, and I got to meet people in a lot of those labs. And that's where I met my co-founders for my first startup. They had just invented the first processor chip to communicate using light. And we spun that technology out in 2015. The company is called IR Labs, and we're cutting the energy use of AI in half by using light to move data between chips. And now we have customers and investors like Intel and NVIDIA and AMD. But back in 2017, we started offering a retirement plan to our employees, and I asked for a climate-friendly investment option in the lineup, thinking it was a simple request. And it ended up taking over 3 years and a lot of persistence to get a single option that at a baseline wasn't invested in fossil fuel companies. And I couldn't believe how long it took, how hard it was. And that started me on my journey to figure out how 401ks work.
Wow. Well, you've been at it now for a good amount of years. I think you have about a little over 30 million in assets under management. In the fund that you've built. Tell us
41.
So it's increasing pretty quickly. That's awesome. So Tell us a little bit about exactly what the fund is today, what the structure of the fund is, how it works. But then more importantly, tell us about the hurdles you've cleared to set yourself up to really start scaling that AUM?
Yeah, so the first thing we did was we launched the first climate-friendly fund that's really just designed to check the boxes of what 401k fiduciaries look for. And the reason we did that was because in diving into understand 401ks, I realized what really drives that industry is the fact that there are lawsuits all the time where these law firms specialize in the type of class action lawsuit where employees sue their employer, usually for having funds that are too expensive in that lineup, and oftentimes also for having funds that have underperformed. And while climate-friendly funds have existed for a long time, they've all been actively managed funds, which means there's somebody analyzing stocks, making decisions on what to invest in, actively stock picking. And it's an expensive way to run a fund. And actively managed funds sometimes outperform the market and sometimes underperform the market. And so it also can risk having employers get hit with those underperformance lawsuits too. And so that's why it had been so hard to get these climate-friendly funds in 401ks. So the Sphere 500 Climate Fund is the first index fund that's climate friendly. It's priced like any other index fund that's a US large cap fund. And then it also just is very highly correlated to the economy at large. So it invests in the top 500 biggest US companies by market cap, and it excludes the fossil fuel companies from that list. And we have a few other screens. We don't invest in the lead contributors to deforestation, tobacco companies, private prison operators, or weapons manufacturers. And then for the remaining about 410 or so companies that we do invest in, we vote our shares to encourage them to do better on climate. And that's a really big, important way to create change in the world around us. We're investing in a lot of the biggest companies in the economy. A lot of people don't realize as a shareholder, you have the ultimate decision power to direct them how to behave. So yeah, so we give people the ability to know that that power is always going to be used to help companies do better on climate, which we believe also sets up companies for long-term financial success.
Now, in terms of removing about 90 some odd companies from the S&P 500, do you replace them with the 90 next largest companies that do meet your criteria, or do you just exclude?
We don't. We just exclude. And the reason is it, first of all, is just more simple, but really it's because the performance of that fund is mainly driven by just the top 10 holdings. Because it's a market capitalization weighted index and fund, the top 10 holdings make up a really large percentage of the fund on a market cap weighted basis. And so the movement of those 10 biggest companies, which is mainly the Magnificent Seven, the famous tech companies that have been doing so well, and it's the same group of top 10 holdings that the S&P 500 has, adding 90 extra at the bottom would have like close to no influence on the actual performance of the fund and would just complicate things. What we end up with is a fund that's super simple, easy to understand, 99% correlated to the S&P 500. So people know what kind of risk return profile to expect for this fund. And we price it at 7 basis points, which means if you invest $100, you're paying 7 cents each year to invest in the fund.
Which is extremely low. Something that I didn't appreciate or understand when we started talking to you, for some reason, I always had in my head, and I'm into all of this stuff, in my 401k plan that I have, I'm invested in various funds. I always thought of them as pretty much just ETFs, but they're not ETFs. You, in fact, can't have an ETF in a 401k. It turns out they have to be very specifically built fund products for 401ks. Talk to us about what that all actually looks like and what it takes to become qualified to be a 401k investment product.
Yeah, it's super interesting because there's actually no law or any real rule that says you are not allowed to put ETFs in 401ks. I think it's just probably anti-competitive behavior of the biggest 401k platforms that just won't let the ETFs in. Most likely probably because they all have their own mutual funds and they want to encourage people to use their own mutual funds in their 401k menus. And if they were to allow ETFs in, there would be a lot more competition for their own fund products. So that's my hunch of why ETFs haven't been allowed on most 401k platforms. You'll get a lot of other reasons that people will give you, but I think that's the real reason because some of the smaller platforms do allow ETFs.
Hmm.
But we knew that if we wanted to make this available, climate-friendly investing available to every 401k investor everywhere, whether inside or outside of a 401k plan, we knew we would have to launch this as a mutual fund. And a
Mm-hmm.
mutual fund is kind of the dinosaur of the fund world. It's just old-fashioned. It's kind of, they existed back when everything was done on paper and the internet was not a thing. And so there are a lot of hoops to go through. When you
Mm-hmm.
launch an ETF, that ETF trades like a stock, and it's available on all the brokerage platforms on day one of trading, even though it never gets on the 401k platforms. At least brokerage platforms is just available. With a mutual fund, not so. We've been going around papering physical agreements with each different platform out there, which is a long and slow process. And they won't even give us the time of day to start negotiating those contracts until we meet their criteria, whether it's $25 million in Fidelity customer demand or $50 million in assets under management, that we've had some waive that as we've gotten more popular. And so it just gives this big barrier to entry to get it into 401k plans, because it's really hard to even get on the platform as a starting point, like the Fidelities, Schwabs, Vanguard type platforms. And just because it's kind of an old-fashioned way of doing things.
And now you are now listed with Schwab and Fidelity, is that correct?
We are, yeah. So we're on Schwab, we're on Fidelity, we're on Vanguard, we're on all of the biggest 401k platforms in the country. It's been a long time coming. We've been live for over 3 years now, and we just became available this year on those biggest ones.
So that's kind of the crux of being able to scale this up. Now that you are actually listed on those platforms, are there any other hurdles in terms of assets under management you'll need to really start accessing their larger clients? And then once you're past there, what does it take to sell to Google employees and Apple employees and Microsoft employees to really scale this thing up?
Yeah. So first, let's talk about those plans, the Google, Microsoft, Apple type plans, because that's really where the 401k market provides incredible access to scale. Each of those plans has about $50 billion of assets in a single plan. And so once we can add our fund, even just one fund, this first one, to one of those plans, we could get over $1 billion invested in our fund just from one plan. And so there's a huge opportunity. It's hard to break into 401ks, like we've been saying, but once you're there, you can get to, like massive access to scale that's really not available outside of the 401k ecosystem. And getting on the platforms was the first big hurdle that we really needed to overcome. The other big one that we are working towards now is getting to $100 million in assets under management, because these bigger plans just use that as a threshold where they're not going to take a fund manager seriously until they see at least $100 million in assets under management. So we're at 41 million now, and our goal is within this coming year, within the next year, we want to be at $100 million so that we can start to really seriously approach these biggest plans and get added there.
Now, you mentioned earlier 7 cents for every $100. 7 basis points, it's very little. So even with, I don't know, $1 or $2 billion, I don't know that the financial metrics would pop off the page. So when you think about how you get to a scale where the numbers are really big and that you can be profitable, can you do that through just scaling the mutual fund? Do you need other fund products? How do you think about monetizing and scaling?
Once we get to the billions, it's decent, but you're right, it's still not great. Our strategy is actually, we think of this phase of the company when we just have this first fund product, it's kind of like the early years of Facebook, where they were really focusing on user growth and they weren't making any revenue. I think for their first 10 years, they actually didn't run any ads on the Facebook platform. They just focused on growing that user base to be enormous. And then when they did turn on ads, they became a money printing machine. So this fund is the lowest priced fund we will ever offer, just like the S&P 500 index fund that most large asset management firms offer aren't their money makers either. It's all their other fund products and other wraparound products that make them money. And so we will be launching additional fund products that will have higher pricing and wraparound products that will have higher pricing as well. And that's where we'll really make our money. And this phase is where we really establish ourselves on the 401k scene as the trusted provider of climate-friendly investing.
Mm.
And
When you
something I
talk
really
about,
like,
go ahead.
oh, I was just going to say, something I really like about starting in 401ks is that a lot of people get their first exposure to investing from their corporate 401k.
Mm.
And once they do start investing outside their 401k, they just look for the brands that they've already seen in their 401k plan offered by their employers. And so this is a really good way to establish trust and legitimacy with the public at large.
Uh, in terms of the wraparound products, can you just give us a sense of what that could look like what wraparound products exist in the world today?
Yeah, well, we'll start by launching climate-friendly versions of all the types of funds that are typically in a 401k plan.
Mm.
Uh, then, we'll look at different things. It will probably include just advising people on how, like, which of our own funds to invest in. We'll be launching our
Mm.
own what we call the Atmosphere portal, and that's where people can log in and see how their money's doing. But equally important, we'll be showing them the impact of investing the way they are in their climate-friendly way, as opposed to if they had invested in a non-climate-friendly fund. So it'll be a fun platform. I'm excited to launch soon, and that's actually part of what this raise is going to fund, is the first version of that platform. Once we launch more funds, people will want to know, oh, like, how do I decide which of your fund products to invest in? And so we'll ask them a few questions and then recommend how you invest. So you can have kind of like a robo advisor type of offering there. And then I kind of daydream over the long term of having physical places in communities around the country where we have financial advisors, and we'd be training a new generation of financial advisors who look like and understand the communities that they're in. So, women don't feel intimidated going into a branch where it's, all men maybe, or if it's a minority neighborhood, we want to have people from that same minority trained up as financial advisors. And I even daydream about having these places not just have financial advice, but like being coffee shops, maybe having a yoga studio, like making it really a community feel, so that people can feel comfortable and not intimidated by the idea of setting themselves up for retirement or saving for college or buying a house, whatever their financial goals are. Just really having community to support people along the way.
Yeah, that's super interesting and would be very cool to see. When you think about the the Facebooks, Microsofts, one thing is getting the HR manager to buy in and say, or CHRO to say, okay, we're going to offer this as part of our 401k plan. Once that hurdle is overcome, then what does it take to drive adoption from employees?
Yeah, so we oftentimes are first engaging with employees before we're even added to the plan, because the request to get added to a plan initiates from employees. And there are these social movements at companies, including Google and Microsoft and Apple, where employees have been asking for climate-friendly options for years. At Microsoft, going back to 2016, and they've gotten thousands of signatures on petitions to HR asking for this. And so we've already gone in and done webinars and teach-ins about climate-friendly investing in 401ks and how to get it added to their 401ks. So we'll just continue to do that. We're already plugged into those communities once we're live on the plans. In addition to that, we can do direct advertising to employees. Like, for example, on LinkedIn, you can do very targeted advertising to just employees of a specific company to make sure they're aware that this new climate-friendly option is available to them. And the nice thing about such direct specific advertising is, because it's such a small population of the overall LinkedIn population, you actually don't have to pay very much for it. And so we can do very targeted campaigns when we go live on each plan. And then something that also is really nice about offering climate-friendly investing in a 401k is when people find out that actually the single most impactful thing they individually can do for the planet is move their money, is move their 401k money, they actually start thinking about their 401k for the first time. So we actually see increased participation rates, increased contribution rates, people logging in to their 401k for the first time when they've never bothered to look at it before, because they're like, oh my God, like, this actually has a bigger impact than installing solar on my roof or buying an electric car. And there's actually no additional cost, right? It's just like less than an hour of their time just going in and making the change. That really motivates people to take action.
something I find kind of interesting is this concept that there's so many dollars in the United States in 401k plans that are just invested in things like the S&P 500. And in doing so, if you have to be in those 500 names and 90 of them are some are in fossil fuels and deforestation and private prisons, those companies are essentially getting pumped up by those dollars, right? Market value wise, simply because there's nowhere else for those dollars to go. I don't know. Do you have any sense of just like almost how much they're probably getting an outsized value gain by the fact that people are putting in that don't want to put in, but have nowhere else to put it?
You are so right. And it's fascinating because it's really the evolution of the index fund and its rise in popularity that has led to this phenomenon where names are getting artificially pumped up. Like as soon as you make it into that top 500 list, you're just by default getting all this money. People are not making a smart decision to do it. They just are doing it. Prime example is this fossil fuel industry that's in decline. It's had the worst performance of any sector of the economy for the past 2 decades. And yet everyone's still investing by default because index funds have just really taken off in popularity. And you can actually see the impact of that a little bit when you look at our back test. So when we launched our index in 2021, we did a 10-year back test of that index to see how the index would have performed if it had been around the prior 10 years. And it's fascinating looking at the detailed back test because you can see all the names. You can see the names of all the fossil fuel companies that were in the S&P 500 10 years ago, and they just have been dropping off over that 10 years. Fewer of them make it into the top 500 list. Some of them were in the top 10 years prior. None of them are in the top 10 holdings now. And something that happened in parallel over that 10-year period is really the rise of the divestment movement. Bill McKibben, 350.org, and more entities getting out of fossil fuels that had just been in by default, whether it's the Harvard Endowment or the New York State Pension Fund or City Pension Fund or the University of California Endowment and Pension. So as these bigger entities have gotten out of fossil fuels, that probably has been part of what's contributed to these stocks going down in value in the fossil fuel industry. And then the other thing that's kind of when you think about the impact of index funds in the modern world, it's not just that it's pumping up the price of these shares, but also index funds pretty much universally, except for ours, vote the way that boards recommend. And that results in them voting against 98% of climate change related shareholder proposals. And that wasn't true a few decades ago when index funds were not as popular. And there were active fund managers actually paying attention to each shareholder proposal and making an informed decision of how to vote. It just doesn't really happen anymore. The vast majority of shares are just going however the board says. And if you think about it, the incentives are very misaligned between the board and shareholders. Boards are financially incentivized with fat checks they get every quarter to have short-term thinking, whereas shareholders who are saving for retirement care about the performance of a company over the long term. And so that's why we think it's really important to not vote by default the way the board recommends, but to actually vote in favor of climate change related shareholder proposals, because installing solar on a roof is an upfront cost, but it saves the company money over the long term. And so we see those examples over and over again.
Well, I mean, if you can get to some meaningful scale, those votes actually do start to carry some weight, I imagine. So that's really, really interesting. One thing that I have found during my time in analyzing the thousands and thousands of companies that have raised in this market is sometimes the deals that raise the most amount of money, they just have the largest marketing budgets. They've decided to lean all in on crowdfunding. Does not necessarily mean they're the best companies. You've had a good raise. You haven't raised tons and tons of money, right? But you've done well, around a few $100,000. But when you think about overall funding, one, why did you decide to do crowdfunding? And then two, talk to me about funding to date, how you funded the company, as well as plans going forward beyond just the crowdfund.
Our first funding came from a venture-led round back in 2021. We raised $2 million led by a venture firm called Pale Blue Dot that just does climate tech VC funding. They're fantastic. They've been wonderful partners. And we had A bunch of angel investors and friends and family invest in that round too. So that's what really launched us back in 2021. And then we did this, what I'll call like bridge round, which is what is available now. And, first it was led by another VC called Fairbridge, and they're fantastic as well. We were really excited to partner with them. And I just realized before we go on to our next bigger round, which will be our seed round, and I'll talk about that in a bit, I realized, you know what, I need to make sure that I open this up to an equity crowdfunding raise sooner rather than later. And the reason I cared so much about this is because this is my second company. My first one, IR Labs, I just felt so lucky to be able to raise any money from anywhere. Back in 2016, which is when we started raising for our seed round, semiconductors and photonics were not a hot topic, and it was really hard to fundraise. And when we did get our first check, that was from Founders Fund back in 2016, I was just like happy to take money from anywhere. But as the company grew and now it's worth a lot of money, I've looked back at the cap table and realized, you know what, we got basically a bunch of like rich people richer. And
Right.
there are a lot of other people who I think probably wish they could have invested early on and never had that opportunity. And there's close to no diversity on the cap table. And I realized, oh my God, I really want to do it in a more thoughtful way the second time around, especially because this company is so rooted in our community. There have been people pushing for climate-friendly investment options in their 401ks or asking their financial advisors for this way longer before we came along. And people are so passionate about this issue.
Yeah.
So for both diversity reasons and just making sure that our community that makes all of this possible can benefit from our success, that's why I really care about opening this up. And so that's why we did this round. And that's why we're closing it also at the end of this month. It's because this is our bridge round. This fall, we are going to be going out to venture investors for a seed round. We want to raise $4 million, and that's going to enable us to finance launching those additional funds that are the climate-friendly versions of everything that's typically in a 401k menu. And we want to get a new valuation for that round. So that's why you look for a lead investor, right? Because they set the valuation. We've achieved so many milestones recently that we think like actually everyone who's investing right now is getting a very good deal. We're probably worth more. So that's why we need to lock this one down and then go out for a lead investor at that higher price. And then the other thing I'll mention is I've also personally invested in this company, and I'm really proud to invest alongside everyone else on the same terms. And yeah, I like to have somebody who's not myself, who doesn't have that conflict of interest, setting the valuation. So that's why I like to bring in an institutional lead investor for each round.
Awesome. No, and I like to go over that because some people could see a funding risk if you haven't had a huge round and things like that. But I know there's a much broader picture. So I like for folks to understand that. In a second here, we're going to bring on Leah, who led kind of our research on the deal to dive in a little more on why we decided to invest. And then we will get into questions from the crowd. But Alex, before we get to that, just one last question for you, for myself. When you think about what success looks like over the next, call it 2 to 3 years. I think it's far harder to go beyond that. What are your thoughts on what success looks like?
Success looks like us having launched all of the types of funds that are on a typical 401k lineup that are climate friendly, and us having gotten those funds on the biggest 401k plan. So we're available on small 401k plans all the way to the biggest 401k plans, whether it's Microsoft or Apple or Google. I have a feeling once we get on one of those plans, the rest will come quickly. I think they will fall like dominoes because in conversations with those benefits teams, they've told me they compete with each other. They look at what the other ones are doing, and they want to make sure that they're matching when it comes to benefits so that they can retain talent. And because this is an issue that employees are so passionate about, we do expect that once we get on that first massive plan, we'll start getting added to others too. I expect those big tech companies to be the first movers, but also other companies. Walmart, for example, has a fantastic sustainability team, cares a lot about this. And this is low-hanging fruit of what sustainability teams can do, that it's actually, it's less expensive than putting solar everywhere, et cetera. And so So yeah, success is launching those extra products, getting on those biggest plans, and then also really growing our platform so that we are enabling people to just invest directly with us more easily so that they can just set up an account, start contributing. They don't have to go through a 401k, and really see the impact of how they're investing really easily when they log into that platform with us and see like, hey, investing with us has been the equivalent of taking this many cars off the road or planting this many trees.
I love it. Leah, thank you so much for joining us.
Yeah, Chris, thank you for having Alex here. I mean, I got really, really excited the first time that I saw that what Sphere was doing. It's actually something that I've been wondering just for a couple of years. I was thinking, why is it that in order to build my own retirement, I must invest in fossil fuel companies? I'm just not interested in doing that. I don't want to be an owner of these companies. I don't want the responsibility to me on my shoulder. I don't want to benefit from the dividends. I just don't want to be a part of that. And I knew that it was hard to do, to get actually, funds without fossil fuels into 401k plans. And that's one of the first reasons why I really appreciated your company, Alex, is because I could see all of the great execution that you had been doing in the last couple of years. You really have been able to kind of put down these barriers and access the world of 401k, get accepted by many large, impressive, recognized plan like Schwab 401k or Fidelity 401k, et cetera, et cetera. And that just really shows how you're capable of executing. And what is really exciting that you probably one of the only companies that actually have been able to do that, to put an affordable fossil fuel plan available to 401k investors. So that was, one of the very first compelling reasons that really pushed us to invest. But the second, and I'm not here to blow your own, but that's just the truth. We're really impressed by you. I think that in order for somebody to be able to get into a world that is so difficult to access, you need to have the grit, you need to have the passion, but you need to have the skills as well. It's something that you have demonstrated with your previous company, which is a unicorn, and that just does not happen every day. So having someone like you that really proved that you can make it in the startup world, leading Sphere is really what tells that if someone can do it, then it has to be you. And the third thing is that I feel like there's a very strong demand. I'm not the only one who doesn't want to invest into fossil fuel. There are a lot of people out there that just don't have the option. And it's something that we've seen because you already managed to get close to 40 million in asset under management. In just a couple years, you've been able to get access to these plans in a world that is very difficult to access. And you also have been able to get venture capital investing. I can name Pale Blue Dot, Climate Capital, which is also a big climate fund, Cool Climate Collective. These are all institutional investors that are used to investing into climate or ESG deal and that want to back you. So for me, investing in Sphere, it's not only about what you're doing right now, but it's also about the potential of your company. What can you become in the future? You've shown us that you've been able to open the door. And I'm just really excited about not just your current fund, SPFFX, but about all the other projects that you have and what that can mean for investors who want to back you. And I think investor excitement is shown as well in the Q&A. We have a lot of very good questions out there.
Absolutely. Thank you, Leah, for that. And I know that Leah is our resident climate tech expert and passionate about it from a personal angle. So I have a feeling you're going to be asking me how we get this fund into our 401k as well. But yeah, let's get to some of these questions from our listeners. So first question for you, how do you measure the tangible climate impact of a fund like this?
So when I talk about showing people the impact of investing with us when they log into this new atmosphere portal that we'll be launching soon, what I mean is that we just quantify the emissions of the fossil fuel companies that we're not investing in. So we take an S&P 500 index as the benchmark, and then we take our index fund as the comparison, and we look at the emissions of those companies that we're not investing in. And based on the proportional ownership of how much you would have owned, excuse me, in those companies, we allocate responsibility for that portion of emissions. And so that's kind of the accepted way of measuring financed emissions per the greenhouse gas protocol, which is, if you've ever heard people talk about scope 1, scope 2, scope 3 emissions, the greenhouse gas protocol is the place where they define how to measure all of that stuff. And in scope 3, there's category 15, which is where they explain how to measure financed emissions. And so that's how we do it against an S&P 500 index as the benchmark.
Cool. Do you plan to offer an ETF version? If so, when?
So I think there might be a couple reasons that someone might ask that. One reason might just be like, hey, I just want to invest through my Schwab brokerage account or Fidelity brokerage account, and I don't see you there right now. And if that's the reason you're asking, I want to tell you, we expect to be live on those brokerage accounts this fall. It could be as soon as September 16th. We filed with the SEC to launch what's called a new share class of this fund. And that's because we have to pay extra fees to go on the brokerage platform side of these things. On 401ks, they don't charge those fees. On the brokerage side, they do, probably because they're aware of all the excessive fee lawsuits that happen in 401ks, so they don't dare there. But they take those fees from the fund managers, and so we have to charge higher fees to be able to pay them. And so anyway, that's why we're going to have a new share class launch. And it could be as soon as September 16th. It might be shortly thereafter. And so anyone who currently has a brokerage account on those platforms will be able to invest at that point. There are some platforms like Robinhood that only allow ETFs. And so for those, we will ultimately have to launch an ETF to become available on those platforms. And if you're interested in that, please let us know. We keep track of those requests, and based on how much demand we see, that's how we will make decisions of what products to launch next.
Very cool. What are the next AUM milestones you're targeting, and what levers can you pull to get there? Do you basically have to get into the TDF default?
TDF stands for Target Date Fund. And here, that was like multiple questions in one. So let me pull up this Q&A one.
Yeah, sure.
Was this in the answered column now?
Yeah, I apologize. Yep.
Hi, Robert McKay. Good to see you. Okay, next AUM milestones. I'll answer that first. So we're at 41 million right now. It's funny, we were targeting 50 million because that was the threshold to get on Schwab, but we ended up getting added to Schwab prior to hitting 50 million, just because they were seeing so much demand for us. So they went ahead and added us then. So after 50 million, the next one is actually 75 million because Guideline needs to see 75 million before they'll consider a fund for their 401k plan lineup. And then there's, of course, the $100 target, which is where we can start really going after the mega plans, those massive plans. Beyond that, then there's 300 million, 500 million, a billion, then it'll be 10 billion, et cetera. We'll kind of go from there. And the more you have, the bigger entities you can go after, right? And they're the really massive, like pension funds out there and sovereign wealth funds, et cetera, that you can start to really target once you're a bigger fund. And then do you basically, actually first, what levers can you pull to get there? I'm very excited about the lever of being available on the Schwab and Fidelity brokerage platforms, because we get emails on a daily basis from people being like, why can't I invest through my Schwab account? Why can't I invest through my Fidelity account? So that'll be one major lever. And once we are live on those accounts, we're also just going to turn on online advertising in a way that we have not done yet. Until now, we haven't talked about our advertising strategy, but we've really just gone after earned media. And we have an incredible creative team led by our Chief Creative Officer, Doug Burnett, who has gotten us over 150 million views on our most recent campaign that launched in June, which is Actors Retire Big Oil. We do campaigns like that just to raise broad awareness of this issue, that most people are invested in fossil fuels without even realizing it. Actors Retire Big Oil in particular is one where we teamed up with actors like Jane Fonda and Mark Ruffalo and approached the Screen Actors Guild, SAG-AFTRA pension, which had over $100 million invested in fossil fuel companies, and said, hey, the actors are not okay with this. Please stop investing in fossil fuels. They listened nicely but didn't do anything. So then the actors went public, and they have over 500 actors who have signed this open letter, and they're posting on social media, and we've gotten articles, and we've spoken on stage at events. So that earned media has been our focus until now, and that has been a great approach to create broad awareness. But as long as people couldn't just go and invest via their regular brokerage accounts, we didn't think it was worthwhile to have paid ads. Once we are available on all the brokerage accounts, we will start turning on just regular paid ads on, like Facebook, Instagram, TikTok, et cetera, just to broadly educate people about the availability of this, and make it really easy for them to invest, whether it's by opening an account directly with us or by investing through whatever platform they already use. Really excited to have a new lever to pull to grow our assets. And then that last part of the question, do we have to get into the TDF default? So target date fund is TDF. Target date funds are the default in 401k plans where the employer automatically enrolls employees, so they don't have to log into their 401k plan on their first day on the job to start contributing. And this has become more and more standard practice, especially for bigger companies, to auto enroll employees. And they do that by putting them in whatever target date fund matches when they expect to retire based on their age. And there is no climate friendly target date fund that exists right now. And so, yeah, we get requests for that all the time. That's an example of the type of thing that we plan to launch a climate friendly version of. And once we do, then companies can choose to have this be the default. And so all those default dollars going into 401ks can start coming to our funds. And that's a really big opportunity.
Oh, that's really cool. Okay, so this is from Vanessa. I'm an IRA owner with Fidelity, not a 401k. SPFFX, your fund, shows up but says I can't purchase it on Fidelity. Will it be available when you reach 100 million in AUM?
So the answer to this question is actually the same answer I gave on that ETF question. We actually don't have to hit 100 million to become available on your Fidelity IRA. We actually could be there as soon as September 16th. That's what we're working towards. And it really just has to do with launching this new share class, which charges higher fees, so we can pay Fidelity their fees. So check back late September or early October, and make sure you're on our email list, because we will be emailing you when we're live on Fidelity on the IRA side of things.
How can you afford to price a fund at 7 basis points management fees when your competition, fossil fuel free or climate funds, price them over 0.1%?
So really, it's a volume play. And I talked about this before. We are using this product as a way of getting in the door and really growing our brand awareness and our user base. And we're a venture-backed company. So by taking investments from venture investors and from equity, the equity crowdfunding from our community, et cetera, all of this allows us to subsidize the fact that we are losing money right now on that 7 basis point fund. And we will be losing money until we get to about 300 million in assets under management. And so one reason we can afford to price this so low is thanks to investors like anyone on this call who has already participated on this raise, subsidizing until we get to scale. We also, once we have these additional funds that are priced higher, they won't be subsidizing the lower priced fund, but that they'll make us more money.
Sure.
And we also negotiated very unique agreements with our service providers. So we work with a whole bunch of different companies on the back end to keep our fund running. US Bank is our custodian, Ultimus is our administration company, FIDA is our index calculation firm, et cetera. And typically when these firms provide those kinds of services, they charge the higher percentage-based fee, like a higher basis point. We were able to convince them to lower that to almost nothing, that basis point fee. And instead, we just pay them a flat rate. So it does mean we're losing money right now, but once we get to scale, our costs don't scale with our scale. Yeah. So once we get to that break even, it's all just upside for us, which is really helpful when you're trying to grow a fund to tens or hundreds of billions of dollars, ultimately.
Yeah. Next question, to the extent you could answer, what is the cost / overhead to run the current fund that you have?
Yeah, it's about $500K per year. All in.
Got it.
Yeah.
Excellent. Last question we have here, and please do drop in any other questions that you have. If you have any that are coming to mind, can you tell us more about Atmosphere? Why would companies subscribe to Atmosphere, and how much would you price Atmosphere Enterprise?
So Atmosphere is our umbrella name for all of our online platform products. We already have the Atmosphere Starter available for free for anyone to use. And you can go to our website, look up the name of your employer, any company in the US, and see how much money that company's 401k plan has invested in fossil fuels. So it's really a free tool to motivate people to take action. And it's based on publicly available information about 401k plans that the DOL makes available, Department of Labor. I also already talked about the Atmosphere portal. That's where individuals who have accounts with us will be able to log in and see both how their money is doing and also the climate impact of their investments. And then Atmosphere Enterprise is what this question is about. And this is a product that's not yet live, though we have been talking to potential customers about it. And this is a much more in-depth tool that measures the emissions of each fund that's in a 401k plan and really presents it in a way that makes it really easy for a sustainability team to understand where's the low-hanging fruit of a fund that maybe has higher emissions than most and might not even be checking all the boxes that a fiduciary on a 401k plan is looking for. Like maybe it has high fees or bad performance. And it kind of highlights those as, hey, like sustainability team, maybe start by going to your HR team, the benefits team, and asking them if they can look at replacing those funds first as the low-hanging fruit, and then gives advice on how to approach HR, what type of language to use to speak the same language of fiduciary duty with HR, where people in HR have no idea what a scope 1, 2, or 3 emission is, and like don't care very much, you know, and sustainability teams have no idea how 401k decisions. And so the Atmosphere Enterprise product is really just to help bridge that gap between sustainability teams and HR teams. And as far as how we price it, we start by pricing it on like a per employee basis. So the price scales depending on how big the company is. Down the line, we do expect that we'll probably end up licensing the Atmosphere Enterprise to other companies that already provide emissions calculations software. So there are a lot of companies out there where this is all they do, but none of them support 401ks this way. And so by licensing it to them, we give them a really easy plugin to provide like a badass support to these sustainability teams that are already using their software so that they can really understand how to improve the emissions of their 401ks.
Very, very cool. Well, I'm not seeing any more questions from the crowd, so thank you everyone for your thoughtful questions. As a reminder, you can go to the resources section at the bottom of the Zoom and click on the link to go check out our full report and analysis about why we invested at Kingscrowd Capital. We have a full report workup, their quantitative rating, all the key metrics. You can see everything there. Then there is a button that can click you over to WeFunder to make an investment if you decide that's something that you want to do. But I just want to thank Alex. Alex, thank you so much for being here today. Thanks for your wonderful responses and for all of your time and for the company you're building. And really looking forward to watching your progress as you continue to push forward. And congrats on all your success to date.
Thank you so much for having me. And I'm so excited to have you as investors. Thanks for all the support.
Awesome. Thank you everyone for tuning in as always. Please stay tuned for future webinars just like this. And we hope to see you again soon. Have a wonderful day, everyone. Take care.